Warm greetings to our viewers and welcome back to Bulletin Bites. Latest news on law, tax and business in India for quarter 3. As we are moving into our last quarter of the year, rather the most puzzling time of the year for most businesses, being informed about the economic situation is crucial. We are happy to take you through the latest and relevant updates and developments that will help your business remain solid yet smooth. Starting with company law updates, the Ministry of Corporate Affairs has mandated every company to maintain their books of accounts in electronic form in India at all times. MCA has also prescribed for the details of the kind of accounting software to be used by the Indian companies in this regard. This will ensure easy accessibility and inspection of the books of accounts of Indian companies. A good news for companies who are eligible to conduct CSR activities and have monetarily contributed under recent Independence Day campaign of Har Ghar Tiranga Azadi Ka Amrit Mahotsav. Your contribution can now be considered for fulfillment of CSR activity. Moving on to labor law updates. Companies are required to note that Employees Provident Fund, that is EPF organization, has recently proposed the removal of wage ceiling and the headcount of employees eligible for EPF scheme. This is surely going to result in expansion of the employees entitled to Indian Social Security benefits. A sigh of relief for companies or employers who have not been able to adhere to payment of EPF to its eligible employees on due to failure of the employees in submission of linking their KYC documents. Recently, EPF organization has authorized the Regional Provident Fund Commissioners to consider withdrawal of prosecution against such employers or companies who have not been able to pay EPF to its employees due to the mentioned technical reasons. Our next update is especially relevant to companies having manufacturing units and other industries in India. EPF organization has introduced an SOP for settlement of claims for death due to industrial accidents. According to this SOP, after the death of an employee, personnel due to industrial accidents, the widow or widower and children of such deceased person are eligible to certain social security benefits. Moving on, companies intending to operate during night shifts and on holidays, the Government of Delhi has now introduced an online application process for seeking relevant permissions for such shops and establishments. Coming to the last segment of our compliance updates, we are happy to announce that as per a recent amendment, the Reserve Bank of India has allowed the settlement of import or export between an Indian party and a foreign party to be paid in INR, provided relevant permissions are obtained from RBI in this regard. This update is of much importance to companies who have many such import-export settlements on a daily basis. Pursuant to this, you can now directly raise and settle invoices in INR instead of separately buying foreign currency for this purpose. A limited window of good news for Indian companies who are looking to raise ECB loans from its foreign parent companies. You can now raise an ECB of up to USD 1.5 billion or equivalent amount instead of USD 750 million till the end of December 2022. The last but the most important update is for Indian companies looking to invest overseas in foreign entities. Please take note that Ministry of Finance and RBI has revamped the Indian legal regime for overseas investment by Indian companies. Our newsletter better mentions the laws currently in place regarding overseas investments. Dear viewers, let us now move on to the transfer pricing highlights, where there have been some interesting rulings given by various tax tribunals across the country. In a ruling by the Pune Tribunal, it was held that there cannot be a requirement placed on the taxpayer company to prove commercial or economic benefit from availing of intra-group service or services. For example, if the headquarters of a company which is based in Germany provides certain IT, HR, or payroll services to its subsidiary based in India or USA, this subsidiary receiving the service do not have to justify the benefits they have derived from the intragroup service or services. However, documentation for receipt of actual service still remains mandatory. An important ruling by the Pune Tribunal, which is vital for manufacturing companies, is based on the concept clubbing for purpose of transfer pricing benchmarking. The ruling states that just the mere use of technical support for the product manufacturing does not simply imply that manufacturing segment and the payment of royalty are interlinked. In accordance to this ruling, the said entities may have to review and align their benchmarking approach. Please do refer to our newsletter, which contains the case law citations and taxpayer names for your future reference and a detailed update on the mentioned news. In our next section, we would inform you about some of the key changes under the customs and GST regulations. During this quarter, various notifications are issued to notify the effective date of implementation for various amendments which were covered in Finance Act 2022. And key implementation includes retrospective levy of interest at 24% on wrongly availed and utilized input tax credit, extension of time limits for availing input tax credit, issuance of tax debit or credit notes until November after end of financial year. Further, notifications are also issued to notify the change in tax rates proposed by the GST Council during last meeting in June 2022. Separately, following the guidelines of Supreme Court, the government has proposed to reopen the GSTN portal for filing the transitional credit returns for a period of 2 months from October 2022 and also issued guidelines for filing such returns by the taxpayer. At the same time, pursuant to the outcome of discussion during the GST Council meeting in June 2022, various clarificatory circulars are issued by CBIC to address the issues concerning industry at large. On the customs side, certain amendments are proposed to extend the concessional rate of customs duty based on end user products, and the validity of scrips issues under export promotion schemes for utilization or transfer is enhanced from 1 year to 2 years. Secondly, the existing foreign trade policy is extended by a period of 6 months until March 2023. And as corresponding to RBI guidelines, amendments are made in foreign trade policy to allow realization of export proceeds from rupee Vostro account. Further, draft policy for export of drones UAVs are also placed in public domain to invite comments under SCO MET list. Let us now move on to the direct and international tax updates for this quarter. Post-COVID, the Indian mergers and acquisitions are reported to be at an all-time high. Such business reorganization transactions are effected through proceedings before courts or company law tribunals. It is seen that post such reorganization, the affairs of the successor entity go through a complete change with effect from the date from which such reorganization takes place, known as appointed date. However, there could be a long time gap between the appointed date and the date on which such order is effective. For instance, the order approving the merger could be received only in financial year 2023, whereas the merger could be effective from an earlier date, say April 2020. In such case, companies were facing challenges in reporting such business reorganizations in the income tax return forms issued by the tax department. The governing body for direct tax, that is CBDT, has introduced a modified income tax return form, namely Form ITR-A, for reporting of such business reorganizations. With this, tax reporting and compliance should now be less cumbersome for such entities. The next update is with regard to refund of excess withholding tax. To reduce difficulties of taxpayers in claiming such refunds, the Central Board of Direct Tax has introduced provisions to approach tax officers for claiming such refunds and has notified relevant firms in this regard. Such refunds usually arise where the arrangement is such that withholding taxes on particular income streams are borne and paid by Indian customers commercially, and subsequently it is discovered that taxes were not supposed to be deposited at all, maybe due to contract cancellation or other reasons. With the refund forms now notified, taxpayers can easily claim such refunds. These are welcome changes and will ease out the burden for taxpayers in India. We would like to conclude our direct tax updates with a quick insight into the international tax developments. In an interesting decision, the Danish Tax Council has held that a foreign company cannot constitute a PE in Denmark through its managing director working from his home in Denmark. Our newsletter contains a detailed analysis of this ruling. Another mentioning word decision of a lower tax court, the forest fluctuation loss incurred by the Indian PE on account of restatement of outstanding balance of funds which were extended by its headquarters was held as allowable business expenditure to the Indian PE. Our last segment of the newsletter covers the topic of accounting treatment of government incentives and grants received. For promoting the Indian manufacturing segment, many incentives and grants have been made available to the Indian companies. Many new manufacturing setups have been established in India to take advantage of these incentives. This quarter, our newsletter throws light on the required criteria for companies to avail such benefits. Consequently, it is imperative for businesses to note the correct accounting treatment for these benefits. We request our viewers to take note of this important aspect to ensure that the books of accounts are maintained in accordance with the Indian accounting laws. Dear viewers, with this, we would like to conclude our Bulletin Bites. As usual, for detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.